We have some big exclusives lined up for you today, and this is a big one itself. Infosys CEO Vishal Sikka, in conversation with Shireen Bhan in Monte Carlo, says that the 2020 revenue target has not been shelved, but the company may not be able to achieve it as planned over the next 3 years, though he reiterates that they would be maintaining the revenue and the margin guidance.
On the flight over, I was thinking about 3 years ago. On the 12th of June, it's going to be 3 years. And I was remembering that time and what it was like. And it's the nature of the human brain that we forget these things. But if you go back and see what it was like, at the time, there was a deep sense of anxiety in the company. There was a sense of, there was a very high attrition. The growth was a fraction of the growth of the industry. And in this climate, after studying what was happening for 2 or 3 months, in the October board meeting that year, I presented this ambition, this aspiration, that let us go after 20 billion, 30% margin, and $80,000 by 2020. It was you put this, you stick this out there, paint it onto the sky.
No, I get that, but are you no longer holding that target?
It is, over the last year, it somehow got linked because of my compensation and so forth. So that, there are two parts to that. The 20 billion, 30%, 80,000, this is a very concise way to capture what needs to be done with the company, with the strategy.
So you're sticking with it?
We are sticking with it, but the 2020 is almost impossible.
Yes, it is.
And so this is how the board decides what to do with the compensation trajectories and all of that. This is up to them.
Give me a sense on the back of the visibility that you currently have. FY18 operating margin guidance between 23 and 25%. Growth guidance at 6.5 to 8.5%. Do you feel that, are you seeing traction enough that you'll be able to get to the higher end, the upper end of the margin guidance, or do you believe that you are...
It's too early to tell because we are just 2 months into the year. As we see better, we will obviously share that with the markets. So far, we are sticking to the numbers. We feel very comfortable with the 6.5 to 8.5 range. I think given the circumstances, and the 23 to 25, and we were at 24 to 25 earlier, and we have taken that lower end to 23 to 25 now, and that is because of several factors like the currency, and the currency itself has a big impact on that. And the U.S. hiring and all of these things all together factor in there. We believe in consistent profitable growth. We believe in ensuring a very tight discipline on the margins. I believe that is the right way for us to operate the company. And that trade-off that, if we were to go lower on margin, that we could somehow do better thing, I don't believe in that. So we are all about ensuring that we will have consistent profitable growth at high margins. And for now, we see 23 to 25, but our endeavor is to ensure through disproportionate growth in the new areas and disproportionate growth in software to beat that trend.